first meeting you ages ago through the MTA and our technical organizations, and then through Hank Pruden's work and stuff. And we actually have a gentleman here who has been working with you for the last 6 months.
Oh yeah,
and
I
he
know.
was the one who passed on your contact information for me. And I was like, oh, this is really exciting, because I've been, showing how different market professionals really tend to specialize in a particular area and have their own processes, and you certainly embody that.
Well, thank you. I've been doing this a long time.
Well, I'm just going to let you just quickly introduce yourself a little bit more with what you want to say about your background and how you got started. I don't really know that, but then anytime you want to launch into this,
Okay.
the ball is yours.
All right, I'll give you a little background information about me, and we'll go from there.
Perfect.
Let me see. Hold on. Well, let me just bring up a first chart here. Anyway, it's a pleasure to be here and to be talking about one of my favorite subjects, Wyckoff. I've been looking at Wyckoff type material since 1971 when I took the course. Prior to that, I was studying English literature, and I got a job through a friend working in the chart room of a technical research department for a commodity brokerage house. And I spent my day making charts by hand. But during that time, I did enough work that they made me an analyst, quote unquote, a technical analyst, which was sort of a joke. And one of the clients that I was working with at the time told me about Wyckoff and suggested that I take the course, and the rest is history. I did. I found it most fascinating. While we're having this presentation, I guess I work through Kyle or whoever, but if there are questions, I don't mind someone asking in the middle of my talk. I like to have a dialogue if possible.
We will keep an eye on that for you, and then we will interrupt you at an appropriate point and insert question for you.
Yeah, that'd be perfect.
Okay.
All right. So I'm going to talk about Renko charts today. It's a subject that I've been studying and exploring for about 9 years. Prior to that, I didn't know anything about Renko charts. And I'll show you why I'm interested. And I think if Wyckoff were alive today, he would be thrilled. I draw a lot from Renko what I drew from Wyckoff's tape reading charts. Of course, I assume most people know that I have developed this program called the Weis wave that plots wave volume on intraday and daily, weekly, monthly charts. When I first saw this, when I was looking at the tape reading chart, this is of a stock called J.I. Case in January 1932. This is Wyckoff's original chart. The red numbers are mine. In other words, what I did is I totaled up the cumulative volume in hundreds of shares on some of these waves. And they tell a beautiful story that we see even today. Same kind of behavior. You see a big, strong up wave early in the morning on 3,100 shares. The market slams back down on 3,500. And then we have this big up wave on 4,900. Any of you Wyckoff students should know what the message is there. The message is quite clear. Wyckoff would call it bag holding or climactic action. In other words, shortening of the upward thrust. All of this effort to go higher, we made only 1/8 of a point on 4,900 shares versus 3,100. That says the market has encountered selling. And the next up wave is on 2,000 shares. And the next up wave is on 900 shares. So it's very clear we're making lower highs and lower lows. I didn't total up some of these wave volumes going down. They're like 1,700 and 1,600. But anyway, it's pretty classic short. And he said in his text on this chart that he would go short And this is where he kept adjusting his stop loss order as it moved down. And you can see going in the latter part of the day, we have a very climactic downwave. Well, it was from this kind of information, looking at the market intraday and the minutia in a way, that I was so fascinated. So I wanted to duplicate this chart years later. In 1993, using tick volume, I tried to create a tape reading chart using 1 minute closing data. Wyckoff's tape reading chart was made from every tick, from every price change. Well, we couldn't do that with today's markets. Even in 1993, if we did a chart from every price change, it would be as large as a football field. Today, it would be 4 or 5 football fields, especially today. But anyway, these are just in ticks. They're not in hundreds or thousands. They're just simple ticks. And I put these wave cumulative volume numbers in here to show you the big effort to go down here on 35 ticks. And then the last down move is only on 12, creating a kind of a little spring. And we go up on 30 ticks. And we work laterally and we end up on only 8. And we go up on 35 and over here only 13. And then watch what happens as we go up. 46, 22, and then right here, 51. So there's that effort again with no reward and the shortening of the thrust. And you see the volume. This is the biggest upwave volume on the chart, or cumulative volume. And this is the largest cumulative downwave volume since right near the low that morning. So it was very apparent from this chart that the market was going to go down. And of course, this was just the beginning of that day. This chart, by the way, is shown in my book, Trades About to Happen, in the section on tape reading. All right, so I took this idea of looking at intraday data, and I went to Renko. And everybody knows about Renko charts to some degree. They're made up of what's known as breaks. And this was the original Renko chart. I'm using TradeStation to construct these future charts that you see. And this is called the classic Renko. And you decide what you were going to have, what will be the point value of each break. There's no time in this chart. Time is not a factor in its construction. There might be an hour in this break and there might be 10 seconds in this break. It's all based on price movement. And people like Renko charts, or they extol its virtues by saying it's a great trending piece of software. It filters out a lot of noise. And those are true facts. But there's a lot more than that. And let me show you a little more. So on here on the left, I've taken the same chart and I've developed some software that puts the volume and the minutes inside each break. And that's almost looking at a point and figure chart with the volume in minutes per X and O. And it's very revealing. I don't know how revealing it is on this chart, but in any event, it's what I developed. And this is the other type of Renko chart. It's called a mean Renko. And it's not quite as good. It's good for intraday trading. It shows all of the price movement. It has wicks. So in the formation of this up break on the classic Renko, there may have been trading underneath the low of the previous break that's filtered out by the close here. So you don't see all the data on the classic Renko. You just see the basic movement of the break based on its price amount. But over here you have wicks that show you how much it traded below the low of the previous bar or below the high of the previous bar. And that way you do see all of the data. So this is not filtering out that much, but there is a drawback to this chart. And that is that it's sort of artificial in a way. When the market moves above the top of the break, it automatically has a setback halfway to the mean. Thus, it's called a mean Renko. So as a result of that setback, the distance from high to high is not 1 point, it's a half a point. Whereas on the classic Renko, it's a full point from high to high, which is a much nicer feature. So this looks like a nice move, but it's only 4 points. All right, let me show you a little more about this now. This is the same chart where I put the volume inside. I changed the transparency of the brick in TradeStation, so I could put the volume and the minutes inside each brick. I don't use this format that much anymore because if you want to make it a tighter chart, it gets too jumbled up with numbers. It's hard to read the numbers. So I do like it, particularly for teaching purposes. And I use these charts that you're seeing today in my mentoring program in a section that I teach on Renko. All right, but look at this chart. This is an Australian dollar 4-pip mean Renko chart. Now look what we've done here. Also, you notice that I put a little dot on some of these wicks. These dots denote or indicate that that we formed a maximum break. If you're using a 4-pip mean Renko, the maximum movement can be double the size, 8 pips. If you're using a 2-pip Renko, it would be 4 pips, and so on. If you're using 20 pips, it'd be 40. But I'm using 4 here, so we know then that the range between this high and this low is 8 pips. All right, but so when I'm looking at these Renko charts, there are 3 things that I consider mostly. I'm looking at the brick volume, and the brick volume is the upper number inside the brick. The lower number is the minutes. I'm looking at the wave volume, which is the first number, and then to the right of that is the number of minutes. I don't always look at the number of minutes on the waves, but sometimes I do, and I don't always look at the minutes per brick, but I always have the volume per brick and the volume per wave. And on this chart, these brick volumes are times 100. So when you see 1616, you know it's 1600. When you see 9, you know it's 900. When you see this 38, it's 3800, the cumulative volume for this downwave. So when I'm making decisions about a chart, I'm considering the brick volume, I'm considering the wave volume, I'm considering where we have the size of the wicks are, because these wicks tell you about lost opportunities. The sellers had the market down to this point, where one more tick lower, this would have been a red brick with a tall wick, but it held and reversed and formed an up brick. Right up here, you have a reversal. So you had a failure here. The buyers tried to keep it going, and the sellers overcame it. So that's good information. And then the fourth thing that I think about when I'm looking at these charts is from a Wyckoff point of view. I'm looking at springs. I'm looking for shortening of the thrust, effort versus reward, testing of breakdowns and breakouts, those kind of things. So looking at this chart, what is the message? Is it going to go higher or is it going to go lower? You look at it and try to determine. Anybody want to venture an opinion? Any show of hands, anything? Kyle?
We have a couple comments. Someone says lower seems to be the consensus amongst.
Okay, that's right. And the reasoning brings together a lot of what I've already talked about. We have a maximum wick, so this brick is as big as it gets and it failed. But what's really interesting is look at the volume, 2,400 contracts. That's more volume than any up brick or down brick on the chart. So obviously we met supply. And look at the duration of this break. 49 minutes trading up and down, one side over the other, trying to get the upper hand. But the fact that we closed down says the sellers won. When you see this break form, then you know we already have another down break. And there's another clue from a Wyckoff point of view. We're testing the breakdown. If you draw a line across here, you can see the breakdown break. Right here was 1,600 contracts, and we went down. It took 32 minutes to form that break. That's where supply overcame demand, right there. And the market went down from there. We've come back into that area, and the buyers are taking some profits. Shorts are getting out, and new shorts are coming in. And all of this selling says we're going to go lower. Watch what we did. Here's where we were, right here, and that's what we did. And that's all during the day. This whole decline is only 11 minutes. The whole decline. And of that decline, no, it must be 111. I'm not sure what it is. But anyway, 49 of it is right here. So you can see we had supply, we had reversal action, we tested the breakdown, and the way I trade this is I wouldn't go short right here. I want to see follow through. I want to see the market show me that it's going to go down. So when it goes down here, I'm comfortable to go short and put a stop above this high. You see? And I probably don't get filled until here. And another thing, let me show you another thing I look at. I pay a lot of attention to the interaction between break volume and wave volume. Look at this up wave, it's 1,700 contracts. This first down break has 2,400. So we have more volume in this down break than we had in these three breaks going up. That adds to the potentially bearish story. So I'm always watching for that kind of behavior. And there are other combinations of break volume that I pay attention to as well. Maybe we'll see some of them. And look right here. We came down to the low, and you see there's a big wick. What happened here? We had some shorts take some quick profits. We have some new buyers stepping in, trying to get it to reverse, but they lost out. But you can see, anyone who watches the market intraday sees these holding actions at previous lows. They really stand out nicely on the Renko charts. All right, let's look at another one. This is another Australian, 4 pip. Same thing. Volumes are times 100. What's it going to do? I won't ask for a count. I'm sure a lot of you can figure it out by now. The first clue is, from a Wyckoff perspective, the thrust is shortening. The distance from this high to this high to this high is diminishing. Secondly, look at the big volume on the upwave. The first upwave was 400, 400, 1,500, and now we have 3,400. That's a great deal of effort and very little reward. And then we have a reversal break, not a maximum break, but we go down on 1,100. That's the heaviest volume on a down break since the low. So if it goes down again, go short. And it goes down right here. So I hope you see what I'm doing here. You can see on this chart that you had a spring over here on this wick, and you went under it here and reversed up, and you had good volume on that, 1,300, and that's what set up this little rally. Not much of a deal. All right, and now look at the bottom here. The low brick has a maximum wick, has 2,200 contracts. That's the biggest up break volume on the chart. So that might have been some kind of near-term turning point. All right. This is an S&P chart. Volumes are in thousands. The brick volume and the wave volume are in thousands. So we have a low down here, came down on 162,000. We rallied on 51,000, came back and tested on 52, up on 102, and so on. Now we've come back down to the low on 120,000. It's not a maximum wick, but it's pretty close to it. And there's a lot of time. We spent 43 minutes trying to reverse, but we ended up closing down for the break. So what's the interpretation? One interpretation says it's effort versus reward. A lot of selling and no reward, but we don't know there's no reward. The other interpretation says it could be climactic, but there's no sign of turning around. Look what it does. We're right here. This is supply absorbing buying at the low. That's what's taking place here. You don't know that until you see this break. When you see this break, you can go short and put a stop here. And write it down. I keep protecting 2 bricks back. So at this low point, my stop is right here. I'm always adjusting them. Any questions, Kyle?
There was just one
Oh.
comment.
What?
There was just one comment. Somebody was wondering if you had written anything about Renko because they didn't recall it being in your last book.
It is in the book. It's just touched upon on the last chapter. I show one of these charts just like this, but I didn't go into this detail that I'm showing now.
And then somebody wanted to know how the Renko bars work in a sideways market.
They go sideways.
Okay. So
Yeah.
you wouldn't see the breaks on the volume.
Well, you'd see wicks. You can have wicks in a lateral period. I can show you on a real-time chart here in a little while if you want.
Oh, cool.
Anyway, let's go and see. This is a Canadian dollar. It's a 5 pip. The break volume is times 10, and the wave volume is times 100. And so you can see that we've come down on 5,600 right here, and now we're turning up. Now this looks pretty obvious. I mean, you can see we've got 1,600 going up. We have 2,900. We have 3,100 going up. We have a maximum wick. It looks like there's a lot of buying, but there's another factor that's supportive for this market going higher. I haven't talked about it on any of the others. I don't know if we had one that was that overt. But markets, and I always tell people when reading charts, and the market makes a low, always look to the left and look to see what we're interacting with. And that's on bar charts or Renko charts or whatever. But you can see that this sell-off has returned to the area where the market broke out above this high. And if I had drawn this line across this high, you would see this decline has come back to test this breakout. And that's one of my favorite trading strategies, is to look for a test of a high volume breakout or a high volume breakdown. And this is a beauty. I hope you can see it. And this is what it did. We were right here, and that's all part of the same day. Very nice move. And all I would do, if I went long, say if I went long right after this break, based on testing of the breakout over here, I just have my stop here, and I wouldn't have been, even here, my stop would have been right here. So right here, I'm not stopped out yet. My stop is, well, the low point of the last 2 breaks is that wick. All right.
So let me ask you, are you moving your stop at regular intervals, like every time it makes a new bar higher? Or
Well, I'm just keeping my eye on things.
Okay.
Yeah, I don't keep going to the matrix and changing it over and over
Oh, you're
again.
sort of monitoring it
Right. That's right.
block by block.
Mm-hmm. And I'll show you some of the other things I do to monitor it too. This is a nice chart. This is the 5-year Treasury note. The brick size is 1/32. The volume on the bricks is 1,000, and the wave volume is 1,000. So what's it going to do? That's the question. We go down on 70,000. We go down on 40,000. We go down on 43,000. What's the answer? Well, there are two clues. First of all, we got maximum wicks on the last two bricks as we go up. So the sellers repeatedly tried to take it down, and the buyers overcame it. The sellers took it down as far as they could go without forming a down break, without reversing its total direction, and they couldn't do it. In addition, look at the total volume of the two up bricks. We've got 104,000 contracts. That's heavier than this up wave, this up wave, this up wave, this up wave on the chart. So there's a lot of demand coming in, i.e. brick volume, and then this big effort to take it down. It's not a spring, it's a double bottom. But look what we did. And this is a nice one. We go up on 232,000. We have a pullback on a total of 53,000 in 47 minutes. And look at that nice reversal break right there. Look at these wicks here. Attempts by the sellers to take it down, and the buyers keep overcoming it. It's a great tape reading tool for reading the market. All right. Now here's a chart of the NASDAQ. It's a 2.5 point mean Renko chart. And I don't have the data on the bricks here. I have the brick volume down below, like this. So we've got wave volume in hundreds, and we have brick volume here, and we've got maximum wicks. What stands out on this chart? There's a Wyckoff concept here that just should stand out to everybody who knows Wyckoff. And that is, we have a spring. We go underneath this line of support on 2,500 contracts. The reversal break has a maximum wick, has the biggest volume of any break on the chart. We rally on 4,900, the biggest upwave volume on the chart, and then we set back on a mere 300. I mean, this is a no-brainer. You know what's going to happen, right? I mean, it couldn't get any easier. Look, here's where we were. So now we go up on 5,100. We go down on 3,000. It only took 4 minutes. This rally took 7 minutes. But then look what happens. We go up on 12,000. We go down on 6,600 and so on. What's it going to do? What's the clue? The clue is very obvious. Look at the size of that downwave volume. Look at the size of the downwave. It's the biggest downwave since we made this low, just in its size. And the volume is the heaviest downwave volume on the chart. And then we rally on half as much volume. This is a place to make the bet. If it forms another brick down, go short and put your stop above the high of that last brick. And look what it did. This is all in the same day. All right. I hope you're impressed.
Yes, we're ready to trade it.
They're nice charts. All right. This is a chart of Apple. When I made this chart 2 years ago, 50-cent break was pretty big. It's not anymore. But looking at this chart, what tells you what we're going to do? What's the overt clue here that we're going to go up or down?
Light volume on that little down bar up there.
Light volume on the little down bar is right. But there's a better clue. Look at the volume on the last break. The last volume is 21 million.
Ah.
That's more than all of these individual breaks. It's bigger than all the upwaves except this big one. It's 40. So it's half as much volume as in this whole upwave.
How come the number's not showing up on the bottom of that last
It
red
means
bar?
it hasn't ended.
Oh, I see. Okay.
Yeah. Yeah. Now in real time, well, in real time, it wouldn't put it there either. It only puts it there when the wave is ended and we've turned up. Yeah. But you see, we've got 21 million shares. This is probably maybe 2 days. A 50-cent break was a pretty good amount of move. Look how many days we have on the chart. We have about 3.5 days on this chart. Most of the chart I've been showing you before were just part of an intraday. So there's a lot of time on some of these breaks, especially that last one with 21 million shares. And that's what we did.
Do you mind just taking a moment to explain that the difference that these are not traditional candle charts in
No,
that they don't have a time axis? I
that's
think
right.
there's some
Well,
confusion on that.
there is a time axis, but they're not based on time. In other
Right.
words, time is not a function of these construction of these bricks. These bricks are all based on price. You understand? It's like a tick bar chart. But you know, when you create a tick bar chart, you have to specify what will be your tick bar. Like on the S&P, you might use 3,000. You might use 5,000 tick bar. Well, it doesn't have time in the equation either, but it's still limiting the size of the movement by tick bar. Here, there's no limit. The only limit is price. It goes a certain amount and then it starts another break. Is that clear?
Do you have any guidelines for how you would decide what type of brick size to use?
Well, I look at the margin. I look at the scale. I look at the scale and I see we've got how much. Let's go back to the previous chart. We've got a rally from 108 to 112, roughly, a $4 scale. So I don't want to make a 10-cent brick because I'll have too many bricks. You see? I mean, it's just like figuring out what wave you're going to use on a wave chart. If I do a 10-cent brick, I'm going to make 10 times as many bricks as I have on this chart, maybe more than that. You won't be able to interpret it for the noise. So if I make it a dollar brick with a scale of $4, that's probably too big a scale. So, you know, you develop a feel for it after a while, and I just did a 50-cent break. But sometimes I have to do trial and error.
Visual inspection is okay.
Mm-hmm. But there's no formula. All right? Okay, I'll go on. That's what we did. And you see that decline was on 79 million. All right. Now this is a chart of Netflix. And here, I was just experimenting. I put the minutes per brick down below as a histogram and the volume in millions of shares inside the bricks. And I was playing with different colors. It's not too much of one I want to use. But looking at this chart, what's the clue of what we're going to do? From a Wyckoff point of view, number one, we're shortening the upward thrust. Number two, we have a lot of effort, 22 million, and very little progress. Number three, the last up break has 14 million in it of the 22 million. So there's a lot of effort here and no reward. So we know that somebody's selling it, right? And it's no brainer. We know someone's selling. Now it goes down on 12 million and we go back on 7 million. 7 million is the lowest upgrade volume on the chart, the least amount of demand. We're on the springboard to go down. And that's a couple of days. Gap open. This is a gap opening. You see all the zeros? Zeros. No volume until we got down here. Anyway. And this is a daily chart of Netflix. I should have shown some daily charts of some of the others. You see, look here, there's no clue on the daily chart. You had a lot of volume as you broke out right here. And the last two bars, the first thought would be it's absorbing before it goes higher. But when you look over here at this chart and you see that 14 million there and the shortening of the thrust and the large effort and no reward, there's a lot more meaning there than there is on this chart. That's all I'm trying to show. All right. All right, this is another S&P intraday chart with the I don't use a 1-point mean Renko anymore. I don't use anything smaller than 3, and I have some that are 20-point mean Renko charts. But this is just showing we had 2 big up breaks right here, maximum wicks as it turned up, and it looked like it was going to go, but we ran out of demand. We've got big wicks going down, and we're testing the breakdown again right here. 103,000 right here in this break is what we've come back into, and we're meeting resistance, so it's going to go lower. It's mostly based on testing that breakdown to the left right here. All right. And this is my last chart. This is a 10-point classic Renko. This shows the high in February this year. And sometimes I put the MACD on top of the chart. I set the short and long 20 and 50, not 12 and 26, but 20 and 50. I'm not interested in crossovers. I'm not interested in divergences. I'm just interested, like with a 20 EMA moving average, the trend. Just a guide for the trend, that's all. I feel quite comfortable going short with all that volume coming in, with the market going down like that. I'm sure it's going to do more. But anyway, on the chart in February, this is times 100,000. So we did 4.5 million right here. We did 1.6 million here, 400,000 here, 1 million, and here we did 2.2. And look how much volume we had in this down break. We had that down break is also a wave because it's only one break. It's 2.1 million. That's the biggest down break volume since way over here. And then we went up on 2.2 and shortened the thrust, effort versus reward. And this last up wave is only 800,000. So there's no demand. It's not the most overt top, but it was pretty clear once you got in here that we were going down. Anyway, I ran through those charts awful fast. You want to have a dialogue about real-time markets or anything?
Do you have real-time charts that you can show us? I think it'd be really cool if you do.
Let's see. How do I get out of this?
So it's going to be the same little
All right,
task.
I'll show you one more. Let me show you do my advertisement.
All right.
This is my book, Trade's About to Happen. This is my DVD that I sell. I sell the Weis plugin for TradeStation, Ninja 8 and 7, MetaTrader 4, and MetaStock.
That's great because we had people asking if you have it for Ninja, so good to know.
I do, and this is my contact information. So I beat my drum here. All right,
that's okay.
See. Let me go over here. And now let me go minimize this. Oh, yeah, minimize this. And minimize that. And here are my charts. This is the monthly S&P. This is a 3-hour. This is a 90-minute chart.
Oh, I'm sorry to interrupt, Mr. Weis. Do you happen to have a little green taskbar? We still see the PowerPoint screen.
Oh, okay. Hold on.
Sorry to interrupt there.
Where would I find that?
So it should be a little rectangle. It's a green rectangle, and there will be an option to either stop share. You'd be looking for that same button from before and just choose it.
Is it a little triangle?
Resume share.
Resume share?
Perfect. Okay, so let's see. We're still on this little PowerPoint screen, but is there...
I know the box you're talking about. I don't see it. No, that's not it. Where should I go?
It should be somewhere on the screen that you're sharing. So on that PowerPoint screen, it might just be hidden in the bottom of the screen or in the top. It's a little...
Wait a minute.
Here,
Remote control more.
no. Here, let it go. If
Or
I get rid of the PowerPoint, you think it'll be there?
He said it's on the
You see? You think it's on this down here?
you could...
Try minimizing your PowerPoint and see
right,
if
let's see
it
what we can
comes
do.
up.
I've got these things up here at the top. I've got something that says, it says resume share. Maybe if I resume share, we'll see it.
We can give that a try, certainly. And if not,
Yeah.
there's one more option. You
All right,
could...
what's the other option?
So is there an option to end share? We can do the same thing and just do a new share. So you can end the current one and then...
There's a pause share.
I got a new share right here.
Right here. It's paused.
Perfect.
Now, let's go to the, no, he said perfect.
But this one,
Now let's see. Oh, this isn't it.
let me see.
Sometimes it gets a little tricky
Well,
with...
I'm not used to using this one. I use another one.
Naturally. So I think you had mentioned the new share button, or even if there's
Yeah.
an option to end share, and
I'm
then
looking for end share. I saw.
Hit more over here.
I hit more.
There's stop share.
Stop share. How's that?
okay, perfect.
Now,
And then hopefully you would see either Linda's screen
I
or...
do. I see Linda's screen, so I minimize that.
Excellent. And then we just
Excellent.
want to hunt for that same little green share that you found earlier. That
Oh,
little...
it's down here. Down here.
They like to hide them along the screen. It's tricky to find them sometimes.
All right. So I want to put my charts up, and I say share, and there they are. You see that?
We can see them perfectly, yes.
You see them perfectly. All right, so I'm looking today. This is a 5-minute wave chart. This is a monthly chart. I have been expecting the market to hold on top of the January 2018 high. Between that and the July 2019 high at 30.29, but of course we've broken through both of them. If we don't hold soon, we're going to go back to the December low of last year. 23, 2 years ago, December 18. Here's my Renko chart. This is the 10-point Renko chart that I showed you a minute ago. This is not really useful for day trading. I use this for, well, it might be today. Here's the mean Renko chart. So this is the break volume. This is the wave volume. These breaks are 3 points. So you could see the spring action right here. We went down here on 24,000. We made a new low on only 9,000. And the first up break off that low was 4,900, almost 5,000. So almost half of what we did on this whole down wave, we did on this first up break. That was the clue that we would turn back up from here. And then there was a big effort to take it down here, and the buyers overcame it, you see? So it was pretty readable.
It looks like it plots your volume statistic if this candle closed, or if this Renko brick closed down, then it plots the volume of the last green brick up.
Well, if we close down, this volume will be red.
No, I mean the Renko brick preceding this
Oh
one.
yeah, right. Yeah, yeah. It didn't know until see it's waiting for this break to be over till we really know that this is the actual volume. Well, it is now. Yeah. Yeah. This
So
is the new
it
break.
plots the when it's got those volume like the 18V and the
Mm-hmm.
2V, that's at the close of just that last Renko brick or the
Yeah.
cumulative?
Cumulative. This
Okay,
is the Weiss wave. This
got
is
it.
the cumulative volume on these waves. Now this is a wave that's only one break. But see, we're going up now. Let's make the chart bigger. So the rally we had from this morning's low peaked up here. We had a 100-point rally in the S&P off the low, and it peaked here. We went down on 6,000. We went back on 14. So we had more volume on this upwave here than we had on this upwave, and we didn't make a new high. So that's a pretty good clue that we might turn down. And I talked about correlation between break volumes. I showed you where you have more volume on a break than you had on a preceding wave. But I'm also watching for like when you start getting big doubles of volume to see what that might mean. I don't see any right here. Sometimes same color or sometimes opposite colors. Those are things I pay attention to as well. But I'm mostly just watching for tests of breakdowns, breakouts, springs, upthrusts. Anyway, and I can put the MACD on top of this chart as well. I do sometimes. I usually use it on the classic. I put it on the chart. I just changed the scaling, and the scale is now MACD. So I have to get it back to S&P scale. But as long as that pair is going up together, I feel confident. Yeah, we're coming. Were you going to ask me something?
Just there was a general question. How on the trade management, are you how are you deciding your exit points? Are you waiting for a reversal, or are you looking for a test, or are you trailing a stop on everything?
Well, I'm watching the behavior first and foremost. You
So
see?
there's not a perfect answer. It's a little
No.
bit of discretion.
Yeah. Here's a 18,000. Here's a 15,000, and now we have a 4, and we have shortening of the thrust. So if I'm long, I'm going to put a stop, maybe just a little bit under this break right here, under that wick. If I'm just day trading, I'm looking for springs like over here. I'm drawing these lines, and you can see that we had a great amount of volume here. That was a real good sign that we were going up. But right now, my stop would be under that break, under that wick. One tick under it. Based on shortening of the thrust, retesting that rebound high. I mean, I'm not trying to play it perfect. I'm just trying to book profits.
But you can use this same consistent process, whether you're day trading or overnight trading, or even holding for a longer term position.
Let me show you this chart of IBM. This is a beauty. Now it's going down right now. But look at this bottom that we made back in December. Market came down to this low. I drew a line of support. We went into a spring position. These are in millions. And look at the volume we had on the first upwave, 27 million. We come back down on 9 and then 2. I mean, if this isn't a perfect Wyckoff chart, telling me that we were poised to go up. And this, you know, IBM went up quite a bit from here. That's just the beginning. Of course, it's coming down now, but look how much it went up. And now look how much it's gone down. Anyway, so you can use these on longer term charts. This is a classic Renko. It doesn't have wicks. I'm not dealing with the real near term data. I'm looking at the bigger story with the classic Renko. So if I put this chart up as a mean Renko, it would be much, much bigger. It would have so many more bricks. Anyway, let's see what the S&P is doing. And look over here. This is the Weis wave on the daily bar chart, as opposed to on the Renko chart. You know, we filtered out all the aberrations, all the ambiguity. You do have some good wave volume in here, but you got a lot of choppiness, a lot of things that tempt people to get out of positions, aboard a trade, are filtered out with these classic Renko charts. I think they're very good for longer term trading, if you're not worried about the next $1.50 on a stock. Let's see what's happening on the S&P. We've come back up. We took out that high of the 100-point rally. I think, no, I'm not sure. Anyway, we still haven't been stopped out. The stop would be now, it would be right under this low. But we had an awful lot of volume on this brick right here. And we didn't make much progress, so I'd be very wary of the market right here.
This almost looks like equivalent to sort of a 1-minute chart, almost, that type of perspective.
Well, yeah, today it does.
Yeah.
Yeah. You know, if I want to make it bigger, I could make it 5 or 6 points instead of 3. But I've been mostly watching with 3-point breaks. Anything you want to look at? Any charts you want me to bring up?
Okay, guys, what would you like to see? This is really cool. We've got it real time here. Somebody wants to look at crude oil. Got several requests for crude oil and bonds.
Yeah. Well, let's see. We'll do April crude.
Yes.
CLJ20.
And then one last thing, people are curious how you set your charts, the settings. A look under the hood.
All right, I can show you. So here's the daily on crude. Yeah, I know. It's betting on a recession. Yeah. Can't help but notice the 5 waves down. And I would draw that reverse trend line. We're not there yet. The crude oil chart is one of my favorites. The turn that we had, let's see, I've got a crude oil page. Look at this chart. This is the monthly crude oil. Last year's rally came right back to test where we broke down. It tested that ice line, it tested the primary downtrend line, and it rallied to the top of the channel. I mean, that was a great convergence right there, confluence of lines. But right now it looks pretty sick. I've got a Renko chart. This is a continuation 15 cent. See, I can't read it when I make it tight. I don't see anything bullish. This is just today. We did 13,200 or it's 1,300. I'm not sure. I have to look. Anyway, the daily chart looks pretty bad. That's all I can say about crude oil. You want to look at bonds? I don't have a bond page. I lost it. Let's see. The March bonds. So it's going through the roof as yields. And that's it. What can you say? It's just the opposite of the stock market. Flight to quality. Look what we've done on the Renko chart over here at the S&P. So the volume that we had here and the increase, we did 15,000 here, we did 16,000 here, a pretty good amount of effort. And in that first down break, let's see, what did we have in that first down break? We had 6,400. But that was the heaviest down break volume right there since way over here. So that was a good sign that we had encountered supply. That's why I'd say I'd put my stop right there if I were long. And then I'd be drawing lines. You want to see how I set these charts up? Is that the question?
Yeah, this is your software, right?
Well, this is TradeStation.
Oh, okay. Yeah, we'd love to.
Well, in TradeStation, it's just you.
And then don't forget to look at gold too, because that's been crazy today.
All right, so on the format symbol, I say Renko. I say mean Renko. We'll make it a 5-point. And we'll go back 6 days. Takes a minute to come up.
Especially today where we've had this volume.
Yeah, so this is what we've done here today. And I have an indicator that puts the wave volume here. And I have an indicator. I use a volume indicator here. It's all, this is a TradeStation indicator. This is my Weis wave plug-in. And this is the MACD. So those are the things I put on the chart. And I have an indicator called a show me that puts a dot on any of these wicks where it's maximum movement. I can do that. I mean, that's nothing to see. This might be a maximum wick right here. I'm not sure. But I'll show you. It's a show me. It's called Renko Tails. But this is not a TradeStation indicator. This is a custom indicator.
So if people want to buy your plugin, do they buy it through you, or is there a TradeStation app store?
No, if they want to buy the plugin, they buy it from me.
Okay.
If you want to buy the NinjaTrader 8, you have to contact me. It's not on my website. TradeStation is on my website. You can buy the TradeStation Weis wave from my website. If you want to buy MT4, Metastock, or NinjaTrader 8, you send a note to me and I send you a PayPal invoice and we go from there.
And at the very end of this, we will show your information, again, your website address and contact information.
I appreciate it. You want to look at gold, right?
Yeah.
I guess it's been going up, although I saw it wasn't just going straight up every day. Let's see. I guess it's April, right? G, C, J. See, it's down today, I guess. Look at that. Well, we're coming, I'm always watching for the pullbacks to where we had previous resistance. So this is where we had resistance in August and September last year. We traded around that area here, absorbed or accumulated. Now we've come back into that area. This would be the first place I would expect the market to try to hold. I would draw a trend line like so. So this is, we're in an area, but there's nothing about the price action that warrants going long yet. It's sort of like standing in front of trains. Let's see the parallel on the channel. Looks like we got to the top of the channel. Yeah. It's pretty nice, huh? These lines work. Anything else you want to ask me?
Let's see. All right, you guys, any other questions? You'll be able to contact David directly to find out how you can get the software for your particular program that you use, as well as the price and everything. Is the price pretty much the same across the board?
It's $500 for each platform.
There you go,
With
$500.
NinjaTrader 8, there's one advantage, and that is that it will put wave volume underneath the point and figure columns. In other words, if you make a point and figure chart, it'll put volume underneath it. I can't do that in TradeStation. It won't do it. That's a nice feature. And I make it from closes. Make it from 4 days. I'll show you what I mean. I don't have it on the, well, I have it. I have a custom indicator that somebody made for me.
I have a question. When you're looking at your Renko charts, say for example on the, we were just looking at the intraday E-minis, do you ever sort of use two box sizes, or rather the wave sizes, brick size, however you call it, side by side, so you can get the condensed time frame?
Yeah, I do. I can do that. I can, with the wave, particularly with the wave volume, I can, like this wave volume, I can make it fit on the bigger waves too. In other words, not just maybe it would be a wave from here to here or something, but I can do that better on bar charts than I can on Renko charts, because Renko charts are going to put wave volume wherever the waves start and end. But if this was a bar chart and I had a wave here and a wave here, I could maybe skip this wave and have a wave size that would draw it all the way up to here. I can do that. Yeah, I show that in my trade setups file.
Okay.
Yeah.
Well, everybody is saying thank you, heaps and bounds. Everybody wanted to learn about this. And lastly, what's the best book or source for people that want to study Wyckoff in more detail?
Well, I think Wyckoff in detail would be my book.
There you go, guys.
And I don't say that because it's my book. I just don't know of any other Wyckoff book. There's Wyckoff's works. That's the primary source.
You're right. There has not been as much written. Certainly Hank Pruden has a lot of articles, but not books.
There's a book called Charting the Stock Market, the Wyckoff Method, or something like that. It was written by the guy. It was published by the guy who does Stocks and Commodities magazine.
Yeah, I think that's like 20 years old, right?
Yeah, it's got 3 authors, and I'm one of them. And all they did is they took articles that we had submitted and had published in Stocks and Commodities, and they put it all into a book. The other author was Craig Schroeder, who used to be head of the Stock Market Institute. He's since passed on. And then the other guy who was the editor of Stocks and Commodities. I can't think of his name right offhand.
John? No.
Jack Hudson, is that it?
Well,
Jack Hudson.
Okay.
Yeah. And he did the bulk of the writing. He just went through the basics of the Wyckoff course. I had 2 chapters on reading a bond chart. And Craig Schroeder had a couple of chapters. That's another book on the subject, but I don't think there's any book on Wyckoff that rivals what I've done here in mine. You know, it takes a little time to read it. It's not a bedtime reading. And also, if you buy it, you let me know, and I'll send you a digital file of full-size charts, which will make reading the book a lot easier.
Wow. That's awesome.
All the charts in the book.
Do you end up doing preparation at night, or how do you stay on top of so much work? You really have
every night I write a stock market update.
Uh-huh.
Where I put up an S&P chart. Most of the time the daily, but sometimes I show the weekly. Every now and then I show a Renko, but not too often. Sometimes I put up a point and figure chart. I put up wave charts, monthlies, weeklies, the whole, to tell the whole story. And so I do a lot of work in support of that, and it's free. There's no charge for it.
I believe everybody can go sign up for his nightly report on David's website.
Right, weisonwyckoff.com.
Excellent.
Yeah, you can get a free copy every night. It's Thursday through Sunday, or Sunday through Thursday, excuse me. Yeah.
Do you have any last parting words you want to advise people on just the way they navigate the markets? I mean, this has been phenomenal, seeing such a unique simplification of really the essence of everything.
Well, the most important piece of advice I can give is to always use stops.
Is to what?
Use stops.
Use stops. Yes. Yes. Yes.
And what we've been through lately certainly bears that out. And as Wyckoff said, over trading is financial suicide. So don't put on more contracts or shares than you can afford.
Over trading is easy to do these days with the electronic platforms. It's so easy just to do a mouse click.
Yeah, this is the casino. I always tell people, don't put your trades on and watch the matrix at the same time. Because this is designed to make you get out and get in and get out and get in. It's a casino. So I never watch it. If I make a trade, if I want to have it handy, I stick it over in the corner. So I can't see the money up and down.
And there's, as a parting shot, somebody is requesting to see the point and figure chart.
Well, I might have deleted it. Let's see. The point and figure chart. Let me just X this off. Give me charts on here. This one. This is a 2x3. In other words, every box is 2 points, and the reversal is 6 times it. So, and it's constructed from every tick. Every tick. I can construct it from 5 minutes or 15 minutes or daily or weekly. I have a chart. I'll show you a chart that I really like. I don't know if I can find it. I can't move this chart. Let me minimize this. It's on here somewhere. That's not it. That's not it. This is a 1-to-1 ratio. You know what that is, Linda? 1-to-1 ratio point and figure?
1-to-1 ratio?
Yeah, box size and reversal are the same.
Okay.
In other words, like a 3-3 or 1-1 or 5-5. I can't seem to find it. It must be,
What is it on?
so the S&P. It must be in the bottom of my list. Look at all my S&P charts on this workspace. I don't see it. Anyway, that's all right.
Does your wave volume do that just on the Renko charts, or will it also do
No, it doesn't on
it
all
on the
charts.
bar charts?
It doesn't on bar chart. Look, here's a 5-minute chart with the Weis or whatever it is. This is a 20-minute chart, 30-minute chart with the Weis wave volume on it in
Ah,
thousands of contracts. So what we're looking for is a change in behavior. Look how we went down this morning or yesterday on 961,000, went up on 571 and couldn't go, went down on 391. It's not too clear, and this is a pretty big chart. But look over here. This is night data, but the volume diminished. And we did 1,297,000 right down here this morning. And we did 1,247,000. That's the biggest 30-minute upwave volume in several days. So we had a lot of demand on this upwave, a lot of buying. But it didn't take out this high. Well, it might have right here. This is based on closing prices. When you format the Weis wave, you put, well, it's being computed from close to close, like a point and figure. The box size is 0.75, I mean the reversal is 0.75, and that's the volume is in thousands of shares. So the reversal means it takes the close of 0.75 higher to keep it going up, or 0.75 lower to keep it going down. You know, I did a webinar before Big Mike. It's on YouTube, where I showed all about trading with the Weis wave, not on Renko charts, but on bar charts.
Big Mike is a great resource. I think he's,
Yeah,
what is it, .io now or
I
something?
think you're right. I haven't been there.
Futures.io.
Yeah. But I can take this same chart and put it on 5-minute closes. So there's the 5-minute data. There's this morning's low. And we went down on 300, this is the day session low. We went down on 376,000. And this was the clue that we were going to go up. We did 129,000 on this down wave, which was a lot of effort, and we didn't make a lower low. So you could have bought on this bar and put a stop right under that low. And then we had this big surge here. You can see the bar volume was the heaviest bar volume since down here at the low this morning. So that was getting a little frothy. And then we came down on 124,000. And we're starting to dry up. Of course, we're in midday now. But it's holding up here near this high, which is a good sign. But the wave volume is very helpful. It shows changes in behavior which, otherwise you wouldn't see. The wave
Yeah,
line,
it really stands out.
this is the wave line, the red line. And you can color it green going up and red going down, but I just color it red. And this volume is in thousands. And I can change the size of the wave. This is 0.75. If I want to, I can change it, make it a bigger wave. So the minimum wave is now going to be 2 points instead of 0.75. So we don't have quite as many waves. That's all that does. For the 5-minute chart, I usually use 0.75.
Do you find that you had to expand it at all in this high volume environment?
No, not too much. If I go to, let's see. If I bring up the, let's bring up the daily. I'll make this a daily. On the daily, I don't use 0.75. And I don't use thousands, I use hundreds of thousands. So over here, I'm going to change the retrace to 5 points, not 0.75. but 5 points. And the volume is going to be in hundreds of thousands. All right, and there it is. So you can see what happened up here. We did 7 million here. We did 7.3 million. We went down on 1.2 and only up on 1.2. The 1.2 is the smallest upward volume on this chart. I don't see a 1.2 upward volume. 1.2 million upward volume. That was
But
on
if
the
it's
last.
cumulative, it's just because it was one bar, right?
That's right. But we've got one bar here that's 1.7. 1.7.
Ah,
This is 3.1.
yeah. It's really cool because it gives that swing chart feel, except it looks like it's kind of connecting the closes as opposed to the highs and lows.
Right. You can do highs and lows if you want to.
Oh,
But I use close.
okay.
And it doesn't show the wave volume here. To see the wave volume there, I have a histogram that I use to see it real time. It's part of the software. And you got to format it so it's the same retrace as the wave line on the chart above. So I was using a 5-point wave. So here it is. Now you can see what the volume is. So right now, through yesterday, the volume was 20 million. If I want to see what the volume is through the moment, I say update intrabar. It's now 24.6 million through today's close, last price. And it's still a down bar. So you see, it's my thesis is that price movement doesn't unfold in bundles of equal time called 5 minutes and hourlies. Price movement unfolds in buying and selling waves. So when you look at wave volume, you get a truer picture of the force of the buying and the selling than you do bar volume. Now, not always. There are going to be some times where the bar volume is, eminently apparent. But many times, the problem with, say if I put up a stock here, let's put up Apple. We use the same retrace, $5. Look at for the most part, the volume on the daily stock chart looks like the tree line on the horizon. There's usually not much definition. There's a little definition lately here, but by and large, look back here. You can't read it. You can't discern anything about volume in here, you see? But over here, if I make this more sensitive, we can get a good idea, a better idea of what's happening in terms of demand and supply. That's the idea. I did that wrong. I got to format it. If I want to format the wave, the volume, let's don't use 5. Let's use 3. We'll use 1 million. We'll use 1 million shares. All right. So look what happened. We went up here on 316 million sometime earlier. That was in November. Look, we went down on 92, down on 65, down on 32. You can't tell from this chart, this volume, how low the volume pressure was on this move down. You can't tell it. You can't see how the volume is diminishing on these down waves from this volume data. But you can see it clearly on the wave volume.
And your histogram on the bottom is beautiful.
Well, that has to be formatted to fit the volume on the retrace on this. That's all.
I see. Okay.
Maybe it is formatted to do it. But anyway, you can see it. You can see that. Let me be sure. No, it doesn't show. No, it doesn't show. I used a 5-point retrace. Well, it's not on there. I don't know why. I have to fix it. No, I made it $3. That's why. Hold on here. I make this $3 retrace on the daily. So the histogram volume will be the same. So now you have the volume on this little downwave right down here. You can't see, it says 32 million in the bottom, summation volume, 32,182,000. But look at the volume here. You see it here. This is Rice wave volume and this is Rice wave volume. And this Rice wave volume here tells you there was no more selling. And you can't discern that from this. You can discern nothing from this. Now you can discern something from this bar. There's a big effort to take it down, and it didn't follow through on the next bar. But meanwhile, the wave volume's just going up, as you see. Any other questions?
Let's see, everybody's just commenting on how cool this is. They're like, oh, this is almost like cheating and stuff. So it really does reduce everything down nicely.
Well, it gives you an upper hand. It really does. Now, I'm not saying every wave is going to give you an upper hand, but by and large it will.
Oh, and there's just one last request to see that SP Renko chart one more time.
Oh, geez.
People can't get enough of it.
The main Renko that we were looking at?
Yeah.
I might have deleted it. Hold on. Well, here's one. Here's one over here. This is the 3-point mean Renko. This is the classic, though. This isn't the mean. I must have removed it. I'm sorry, I can't. I don't know where. Maybe she. No, that's not.
That's okay. You know what? People are just going to have to get your indicators so they can play with these for yourself.
Yeah, right. Well,
Yes,
I assure you, they'll really enjoy it because it gives you a great. Here's the one I think we were looking at. This is a 5-point mean Renko.
Yes.
That's the one where we saw the volume that came in right up here, right in here. So you see, you went up on 66,000 and you tested it on 19. And then you went down on 40,000, 20,000. So anyway.
And are you there to support this product yourself?
I'm here to help anybody figure out how to do retrace settings. I have a 20-page trade setups file.
Oh my goodness.
It comes with it. It's also discussed in my book. There's 2 chapters on tape reading. Part of it's on the Weis wave. And my website has a lengthy discussion and examples of wave charts, mostly on dailies. And I'm available to help.
Excellent. Thank you. I have a feeling you'll have a new fan club purchasing your indicators here. It's really a great way to keep things simple and structured.
Well, it's been purchased by traders all over the world, from Hong Kong to Azerbaijan.
Wow.
You name it.
Well, thank you very much for
right.
your presentation today. What we did is we're recording this so that people will have a chance to go back and listen to it again. Sometimes when you hear something a second time,
Sure.
you might catch things that you might have missed the first time around. And this was really nice and concise.
All right. I'm glad you enjoyed it. I know I did.
Oh, thank you, David. What a pleasure and an honor to have you speaking for everybody today.
All right. Y'all take care.
Have a good weekend.
You too. Bye-bye.
Bye.
Have a good one.
Show me how to get out of this.